After the previous video that we did on how we get auctioned, I felt it relevant to expound on something we talked about. If you haven't watched yet, please go back and get to see where we are coming from. Welcome to the House of Point. This is where we see it as it is. To my returning subscribers, thank you so much. And if you're here watching for the very first time, you're very much welcome to this channel, and be part of us by just hitting on that subscription button so that you get notified whenever we are making any video. Otherwise, I'm so glad to have you this moment. So to start with, I would like to say that this video will be most relevant to anyone who has ever taken a loan. And if you're planning to take one, then watch this video to the end. It might just be a game changer to you. Have you ever taken a loan and felt confident that you're going to repay it, only for things to sudden? Maybe you're finding the loan uncomfortable to pay. Your monthly payments is going up, your budget becomes tight, and you start wondering, but I didn't borrow more money. So what am I paying more for? Well, you're not alone. This is what many Kenyans are going through today. The truth is that many people are not failing because they are irresponsible. They are falling into something called the interest rate trap. Let's break it down in a very simple way. So what is this interest trap? When you take a loan, you don't just return the money you borrowed. You also pay the interest, which is the cost of borrowing that money. Now, here is where the problem comes in. Not all loans are the same. Some loans have this thing that we call the fixed rate interests, and others have the variable interest rates. So what is the difference? Maybe someone is saying that I thought it is all the same. An interest is an interest. No, the difference is that when we are talking about the fixed rate, this means that your interest rate stays the same, your monthly payments stay the same. What you agreed at the beginning does not change. This is predictable and you can plan your future around it. But when you take a variable rate loan, it means that the interest rate can go up or down at any given time. So your monthly payments can change and you're not fully in control of what you will pay in the future. And this is where the danger begins. So how do we get ourselves into this trap? So how does it happen? Let me explain to you. Let's say you take a loan of 500,000 shillings from a bank. At the beginning, you are told to pay 25,000 per month. All right? So you look at your salary or business and say, okay, this one I may manage, or I can be able to manage. Everything is fine. For a few months, everything is fine just for a few months. Then something happens in the economy. The central bank increases their interest rate, and banks respond by increasing also their lending rates. And suddenly your monthly payments move from now 25,000 to 30,000. Then maybe from 30,000 to 35,000. So this is an increase. But when all this increase is happening from now the rates of the central bank, remember that your salary has not increased. Your business income also has not changed. Now, what happens? You are stuck. You get stuck in that rate. I hope you're understanding what you're talking about. So, why is this happening more in Kenya today? Let us see. Why is it that majority of our people are going through these interest trap rates? Right now, interest rates in Kenya are relatively high and unstable. This means loans are expensive. The variable rate loans are more risky. The monthly payments can change quickly. So many people who took loans when things looked manageable, they are now finding themselves in the midst of the rates having gone up. So the same loans that they took there before now has become a very, very heavy burden to them. This trap is very dangerous in this case. Number one, it changes your plans without warning. You may have planned your life based on a certain monthly payment. Then suddenly, that plan is no longer valid. Or number two, it pushes you into your financial stress. When your payment increases, you may start skipping other bills. You cut essential expenses and borrowing again to survive. You remember the other time when we were talking about how people get auctioned. They borrow so that they can be able to repay another payment. So when you get yourself into these traps, you can find yourself borrowing so that you can be able to survive. Imagine, and you're in the midst of paying another loan. Number three, it can lead to default and auction. If you fail to keep up with these new payments, the loan becomes overdue. Penalties are added and you may face auctioneers. So how do we protect ourselves? Because remember, in every situation that is heavy, despite how heavy it is, there is always a way out. Let me give you some of the things that you can be able to do to avoid getting into these traps. Before taking any loan, ask clearly, will my monthly payments ever change? So don't assume, please confirm, please confirm. The next thing that you're supposed to be doing, prefer getting the fixed rates loans if possible. Yeah, if you're in a position to go the fixed rate way, then the better. A fixed rate loan gives you stability, even if it looks slightly expensive at the beginning. Yeah, when you're taking the loan, you're going to find that it is expensive, but it will protect you from sudden increases later on. The next thing that at least you're supposed to do, if it is the viable rate that you have taken, then prepare for the changes, all right? Prepare for the changes. So how do you prepare for these changes? If you must leave room in your budget, do not borrow at your maximum limit. Expect that the payments might increase at any given time, okay? So psychologically, be prepared, all right? So create room in your budget so that it can be able to help you or accommodate you when you're going through the rate increases. The next thing at least you're supposed to do, avoid taking the long-term loans without understanding the risk. Okay, what is the risk involved? The longer the loan period, the higher the chance that the interest rates will change. All right. The next thing that at least you're supposed to do, keep an emergency buffer. Have some savings. Don't put all of your eggs in one basket. If you borrowed, please ensure that you have another account that is holding your savings account. Even a small financial caution can help you survive when payments suddenly increase. It is going to save you through a lot. To my final message to you, my dear viewer, the truth is that many people are not being auctioned because they refuse to pay. It is not refusal to pay. You see, me, I thought that people were refusing to pay. No, it is not refusal to pay. They are being auctioned because the cost of their loan changed along the way. Yeah, and no one clearly explained the risk to them. So before you take the next loan, all right, remember this. The danger is not just borrowing money. The danger is borrowing money whose cost you cannot control. Understand the terms, ask questions, and make decisions that your future self can be able to handle. As we are closing, if this message has been able to help you understand something new, share this video with someone, because right now many people are entering into taking loans without knowing these traps exist, and sometimes awareness is what saves us from losing everything. Please help a friend to help a friend for us to be able to have a better future. This is the channel that we say it as it is. Ensure that you hit on the subscription button, like and share. Until next time, that was my time. Bye.